Exercise 1016 gives us some insights into price earnings ratio and earnings per share and gives us some idea of how these things move in relationship to earnings, share price, things like that. So they tell us in 2017 this company made $308 million. 308 million, okay? 308 and then 6 zeros. I don't have enough room for all those zeros. Minus the 15, that is the dividend due to preferred shareholders. So I take that number, which is what, 293 or something? We'll do the calculator dance together. So we'll take 308, which was the earnings, minus the 15. That gives us 293. And we had 400 shares outstanding, 400 million shares. So we'll divide that by 400. And we come up with earnings per share of 73.25. So our earnings per share that year is 73.25 cents per share. Now the next year they tell us that they only had 129 million in earnings minus 20 due to shareholders, the preferred shareholders. I can do that in my head. That's 109. That's the amount. And we had a total of 150 million shareholders out there. So I take the 109, the 129, minus the 20, gives us the 109, and then we'll divide that by the number of shares that are out, which is 150 in this case, 150 million. And again, we come up with almost exactly the same earnings per share, 72.66666667. So in either case, I think we can call them both 73 cents per share. Now let's take a look at the second requirement, which asks us to take a look at and compute what's going to happen with the price earnings ratio. And now we have to look at the stock price, and that's also given to us. In 2017, our stock price was $10.97, and in 2018, our stock price was $12.02. Our earnings per share, and I'm going to bring those down to 73 cents because I think that makes sense. And now let's do our price earnings ratio. 1097 divided by 73. 10.97 divided by 0.73. 15.0273. 15.0273. And we'll do the same thing here, 1202 divided by 73 cents, 0.73. And we come up with 16.4657. So I want you to take a look at a couple of things here. Even though in 2018 it looks like things are not going so well, the average shares outstanding is less than half, the earnings are less than half, the earnings per share remains pretty constant, We're making less than half the money. We're dividing it by less than half the shareholders. Stays pretty constant. Oddly, the stock price has gone up in 18. That happens. Maybe people think it's a better buy or whatever. So although in 18 the income is down and the shares are down, the price earnings ratio has gone up. Odd things happen. That's why I say when you're looking at ratios, please look at every possible ratio that you can compute before you make any decisions.